What is going on, y'all? Welcome back to Blockspace Live. We have got a packed docket today. Kraken is shelving its IPO attempt. Maybe try again another day, but they say right now the market is just not ripe enough for it. We also have a story about a Vanity Fair hit piece on the crypto riche that depicts them exactly as you might expect, actually. And probably the biggest news today, the SEC is finally going to give us some guidance on what a token offering is and should be, and how developers and teams can manage these without getting their pantsuit off. And we will close with a story on Bitrefill suffering from the Lazarus Group hack through Telegram that we discussed on the show a month or two ago. And we also have some great guests lined up today. We have Francis Corvino of Lygos to talk about the Blockfills bankruptcy. We've got Adam Reed of Ledn to talk about the Bitcoin lending market, and Tom Massaro of Cathedra to discuss the Sphere 3D merger.
Blockspace goes live on Monday, Wednesday, and Friday at noon Eastern. We feature quick hits on the latest in mining, tech, AI, Bitcoin. Make sure to hit subscribe if you're watching on YouTube. It's that bell so you get notifications, and follow on X. This is a podcast you can find anywhere podcasts are downloaded. And if you like what you hear, you'll love our newsletter at .blockspace.media. Sorry, newsletter.blockspacemedia.com. And lastly, we have a conference this April in New York City. It's a technical conference targeted for the investors. If you're in New York City, go to opnext.dev. Love to see you there. Info and tickets on the website. This show is brought to you by CleanSpark. Let's kick it off, Colin.
And we'll start with a little just market update, because I think this leads in well to the Kraken story. Bitcoin down today 3.4% after just touching, almost getting back above 75,000 this week. We're still, well, we were up a lot more on the week up until this sell-off. But, we're still above 70K. I think a lot of people were surprised to see this, considering the entire world is kind of shaking right now, or world economies are shivering over the war in Iran and whether or not oil prices will grind the global economy to a halt. And then, actually on Tuesday, we got almost to 76,000. So highest that we've seen since the February crash. But, we'll kind of see where we go from here. I think some people were cautiously bullish here. Market looks somewhat good, but you never know. I mean, we could have a liquidity crunch and this could go back down to 60 in a minute.
Yeah, I don't know why you're looking at Bitcoin. I'm looking at oil, Colin. Oil's where all the money's being made right now. Oil just almost kissed $100 yesterday. The Strait of Hormuz, still, it's will he, won't he be open or not? I heard something about like some ships getting through Iran, maybe like letting off the gas. I don't really know. Everybody and their dogs got an Iran take these days.
Yeah, I was about to say, everyone's an expert on the Strait of Hormuz these days. So we'll leave that where it is. Love to see the Strait open. Love to see oil prices come down just a little bit. But with regards to the current crypto market, Kraken is shelving its IPO plan, saying that right now market conditions just aren't really good enough for it. This is a scoop from our friends at CoinDesk. The lead here, Kraken's parent company filed a draft S1 registration statement with the SEC in November regarding the proposed public offering of its common stock. But right now, it is apparently putting it on hold, according to two people with knowledge of the matter cited by CoinDesk. Now, Kraken, as that earlier paragraph mentioned, announced this IPO at the end of last year. They were probably getting the paperwork ready when Bitcoin was, these IPO registrations take a long time, multiple months of work. And they were probably putting a bow on it around October when Bitcoin was ripping. So you can see why when they filed this confidential prospectus, the timing was really good for it, because Bitcoin was hitting an all-time high, or it was just coming off of an all-time high in November. Things were doing great. But now, as Bitcoin's cut in half from that all-time high, and especially after February's brutal drawdown at the first of the month, Kraken is changing course. From CoinDesk article, it doesn't look like they're entirely scrapping their plans for an IPO, but they're going to hold off until market conditions improve. A Kraken CoinDesk spokesperson told CoinDesk, quote, or Kraken spokesperson, excuse me, told CoinDesk, quote, "As we announced in November, we confidentially filed with the SEC. That is all we can share," end quote, when they were asked about whether or not this was being deferred. And I think the reticence of that quote and the fact that they weren't willing to divulge more information kind of tells you everything you need to know. It's like, yeah, we filed for a prospectus, but that's all we can share. If this was really not true, they probably would have pushed back against it a little bit more. So,
yeah, I mean, just let's recap the past year. Like last summer was hot IPO season. You had Circle absolutely come out the gate swinging. You had, I think, Bullish had a pretty hot IPO. So like everybody was trying to IPO. Obviously, like Kraken started sprinting in that direction. Maybe that was always the plan. Maybe it was somewhat like, okay, it's IPO season for these crypto companies. And then they raised what, 800 million at a 20 billion valuation. Gut check. That seems fair to me. Kraken's an OG. They do a ton of volume. They're like a premier, company. And they just like what 2 weeks ago we did the story on them getting that Fed license, which was huge. So yeah, they were kind of winning, and now we see them taking their foot off the gas and delaying this.
and that makes sense to me. Don't cash in your chips if they're not going to be worth as much. And to your point, Charlie, they have been on a hot streak. They're the first crypto company to get a Fed master account. Now it doesn't have the same benefits as a full-scale Fed master account. They're calling it a skinny master account. What this means, though, is they can access Fed payment rails for bank-to-bank settlement, but they will not be able to earn interest on their deposits with the Fed. So, crucial difference there. And going back to what you were saying about last year being a hot one for IPOs, Charlie, according to CoinDesk here, there were at least 11 crypto IPOs in 2025 that raised a combined 14.6 billion. Big leap from the 310 million raised in 2024. So you got to wonder if some people at Kraken aren't a little bit kicking themselves thinking, well, we kind of missed the juicy opportunity last year for this. But, with Bitcoin down to 60 or 70K or so, this to me makes a lot of sense. And if you don't really if there's no rush to go public, I mean, obviously people would love that liquidity event. There's no reason to do it. And to also, per what you said, Charlie, Kraken, one of the OG exchanges, really cool to see them still out there and innovating and doing things at this stage in the game. Because they were one of the first, I would say, non-sketchy exchanges, or one of the more buttoned up ones.
Yeah, they're like the trusty exchange. I mean, I've done business there a long time. And they were the first, I think they were the first exchange to do proof of reserves. I don't think they did I'm not sure if they've done proof of liabilities, but yeah, they kind of led the mainstream tier 1 exchanges in their like proof of reserves, which is showing that they do in fact have the Bitcoin and crypto assets that they say they do. So yeah, I mean, it's hard not to kind of like, I think the founder, Jesse, he's kind of like one of those like more cypherpunk coded big name founders. There's a few of them still out there who are OGs who still like retain some street cred in the space. I'll also mention that this, I have to point out that the Circle chart, like if we would talk about like public companies, if you hadn't been watching, Circle has been soaring since their bottom in February, $50 per share in February, and now over 200%, $132 per share. Probably related to the Clarity Act talks going well, maybe. But like, we do have in the market currently, like these IPOs continuing to perform pretty well. So that, it's down from what's funny is like it's technically up from where it IPO'd last summer at about $100 per share. So up 30% since then, not bad. When the rest of the market's down, like bad, not too bad.
Yeah, I mean, definitely benefiting, I think, from Bitcoin's bounce here. But I do wonder, per what you said, Charlie, how much of this has to do with talks for clarity going well for stablecoin issuers. We covered the scoop or rumor, depending on who you want to ask, from TFTC on Monday's show that Coinbase is lobbying against a Bitcoin de minimis tax exemption in favor of a stablecoin de minimis tax exemption in the Clarity Act. A lot of he said, she said. Some people said it was fake. Zach Shapiro from the Bitcoin Policy Institute said that they were also hearing this. Who knows what's true? But I do wonder, you can kind of leave Bitcoin even to the side of this if you want to divine something out of Circle's move here in its stock. Are there actual legitimate benefits in the Clarity Act that are being carved out right now for stablecoins? Are the stablecoin issuers going to get what they want in that bill? The biggest one, obviously, is being able to pay customers interest on their deposits in the stablecoins, which banking industry does not want.
Yeah. While we wait to see about our next guest, Lygos, I can riff on this a bit more. Like, Kraken has a bunch of different plates it's spinning. One of the things they've been doing is, if you're familiar with Coinbase's Base, which is a based rollup on Ethereum, a little bit controversial, but it's been quite successful from a user standpoint. Kraken's got their own that they've been in development of called Ink. I'm not sure too many details have been revealed, but it's funny, like these two companies are following really similar playbooks because like these playbooks work. And so we can I guess like do a holding pattern while we wait to see where Kraken goes. I would love to get someone from Kraken on here to chat about this. So
yeah,
if you are with Kraken, hit up your people. Send a message in the company Slack to come on to the Blockspace Live podcast.
Well, Charlie, I think that does it for this one. I say let's go ahead and speak of the devil, and he shall appear. Well, our first guest of the day just popped into the green room. So we're going to go ahead and bring up Francis Corvino of Lygos Finance.
And Francis, you are on the show. Welcome to Blockspace Live.
How you doing, Francis?
I'm great. How are you guys?
Pretty good, man. Thanks for joining. Got a few questions regarding, just general market, especially in the lending landscape, as y'all at Lygos know very full well. But I just want to get a quick update from you because y'all have been tracking this pretty closely. What have you learned about the Blockfills bankruptcy since the initial filing hit on Sunday? So for those of you who have listened or haven't listened to our prior podcast, Blockfills, crypto financial services company, filed for bankruptcy on Sunday for Chapter 11 protection. And there are some new filings that came out since we've covered that on Monday. Francis, what is the latest on this bankruptcy?
Yeah, I mean, just headlines. You got about 145 million in total unsecured claims. They have a collateral package still in terms of value at the company worth about 30 million. And they did about 61 billion trading volume reported in 2025 with over 2,000 institutional clients. So this is kind of one of the more quiet behemoths. It's not someone that everyone in the industry necessarily knows compared to like an FTX or maybe a Celsius, just because they're a little bit more institutional facing than most of these sort of like former retail platforms. But the big thing I think that's come out is the reality that this is not a new SOAR, which is opened up for Blockfills, right? I think, we had Bitcoin dip under 80K, I think on February 2nd. And a lot of people probably pointed to that as being the impetus for Blockfills entering Chapter 11. But I think if we look behind the scenes, we can see kind of a picture of a company which has been struggling since even 2022, right? They had a series of mining loans go bad, namely Axa Digital. They lent 123 Bitcoin and 500 ETH to Lygos Finance, which is stuck in Singapore bankruptcy. And additionally, there's been pretty much constant rumors about issues with their derivatives book. So it's just kind of a continued burn for these folks. I don't think that this is, I think what's really come out is that this wasn't a new thing. This was a hole that's been burning at the bottom of their book. And then Dominion recently moved one of their creditors to freeze about $4 million in Bitcoin on their platform. And that was approved by the courts. Essentially, they put a temporary restraining order on that Bitcoin. And that likely was the trigger that had the the bigger class of creditors say, okay, we're going to restructure this and push this thing in Chapter 11 now. We're not just going to let 4 million flow out of this entity.
Yeah, it's interesting to see if the 4 million was the thing that set this off, is how little you need to get the dominoes, falling in this case. A few other kind of housekeeping items before I move on to my next question. And some of the filings that came out recently, some of them were procedural. The holding company or parent company Reliz, I don't really know how to pronounce it. They decided to consolidate all 4 entities that are involved in this bankruptcy into one to make sure that they can just process all of the claims as one entity as they go forward through the court cases or go through the restructuring. The other interesting one was this motion that they were granted to use cash collateral from a loan from Celsius, which 2 things there. First of all, going back to the hole has been there for a while. If the court documents said that they had been basically in default on that loan since August of 2025, if I understand it correctly, or that was the last time they made a payment. But the biggest thing for me there is like Celsius. We're talking about Celsius again. How are they even a player in this?
Well, I mean, you're still, as a retail client, talking about Celsius, right? I think not so long ago, quite a few Celsius clients who had received USD or BTC from the platform had that assets attempted to be clawed back. So I believe, if I remember correctly, the specific issue at hand with Celsius was sort of a botched settlement from Celsius, which led to there being residual value for Blockfills. And now that capital, I think, is probably supposed to be flowing back to Celsius in the not so distant future. And it just, or the estate of Celsius, right? And that, obviously hasn't happened. But again, I think it's not so much an individual, 4.2 million as being what broke the camel's back. It's more like someone is no longer willing to play along with this, right? I think a lot of the folks who were involved in the Blockfills scenario knew what was happening from for a while, right? And at some point, people recognized, hey, there's sort of 2 classes of creditors here. There's the larger class of creditors and there's a smaller class of creditors. And when that smaller class of creditors is no longer getting along with that larger class of creditors, that's when you start to trigger sort of maybe some Chapter 11 bankruptcy, which can give some of those larger creditors an advantage over some of those smaller guys.
So, my last question on this, I actually have a number of questions. We probably could do a whole podcast on this, but are you surprised that we haven't seen more contagion from this, or do you think that that's something that will take a while to play out?
I'm not, to be honest with you. I think if you look at, these are names which you've seen before, right? Like SBI, I think, showed up in the last 24 hours as another creditor. Like SBI has dealt with worse in the past, right? Like this is a small avalanche, and they've dealt with avalanches at the top of Everest. So I don't necessarily think we're going to see a whole lot of, and same goes with Nexo, right? Nexo is a little bit more of a complicated situation here, but like Nexo, likely a situation in which, there's been some things happening behind the scenes in the past. Is this going to be what tips the camel, or, is this going to be the straw that breaks the camel's back for a company as large as Nexo, given all of the kind of seemingly insurmountable pressure that they faced back in 2022 with Autoru and the Bulgarian boys? Like there was quite a lot of pressure both on their withdrawals, on them via socials. And is this going to be enough? Probably not. And my guess, this is probably going to be an isolated event.
So Blockfills, it feels like one of the first bodies floating to the surface, but it's not like that big in the scope of like bankruptcies. Do you think that there's more of these Blockfill types companies perhaps that could emerge?
Yeah, I mean, I don't think that this alone will be a big enough trigger, though. I think that there are a number of firms who are still patching a hole from 2022, which is looking more and more insurmountably large, right? Another, a common thought process in the industry is like, if Bitcoin price goes up, everyone is saved. But the reality is, if your liability is in BTC, which for some of these guys behind the scenes, it probably is, because back in 2022, when Bitcoin was in free fall, it might have made sense to change your liability into BTC. But if that BTC liability now is, 75K, and there's been significant appreciation in Bitcoin, that's significant appreciation in the value of your liability as well. So realistically, yes, I think that there are some very significant sort of like background issues for a lot of these companies. What pushed a lot of folks into bankruptcy in 2022, beyond just losses on the balance sheet, was issues with duration of the capital, right? You had Celsius, who had a number of trades on, like the staked ETH trade, which needed essentially that ETH to be locked into that Lido smart contract until the merge event. They needed to exit that early, right? And that created sort of a lot of pressure on the staked ETH pair, and that led to a depegging. And they needed to, all of a sudden, serve a bunch of clients their capital back on the internet with everyone talking about it. So they couldn't really survive the trade. Same thing with GBTC, right? Eventually, if you were willing to pay the interest for long enough, that did become an ETF, and you could get your Bitcoin out at pari passu. But people weren't able to survive that level of duration. So if we see panic in the streets, that's probably going to be the thing that is more likely to push some of these companies over the edge, because now they have capital that they're required to get to their lenders in maybe 3 days or something like that, and that capital is locked up in Singapore bankruptcy court like Babel, or it's locked up in some leveraged long trade that folks are trying to sort of like get themselves out of. Back in, I think, 2020, in March of 2020, a company which is actually on the Babel, who is sort of like that's where Blockfills is a creditor here. Babel was actually caught, recorded, saying, we're just going to try and trade our way out of this. We got a hole in the balance sheet. They still got a loan after that fact from Blockfills and many, many others. They were still able to raise a round in 2021, I believe, from Susquehanna, which I don't know if you noticed is also an investor here in Blockfills. So it's where exactly does the buck stop? A lot of folks are likely trying to trade out of this position. There's a lot of historical precedent for people trying to trade out of the position. And there's a lot of historical precedent also for other lenders and other VC funds coming in and plugging the hole temporarily in the hopes that some of these folks will be able to trade out of that position.
So to close here, Francis, because you said something really interesting that I wanted to double tap on and give you a chance to expand on. I think a lot of people would look at this bankruptcy and say, well, clearly the February sell-off was the thing that finally did them under. And that's probably true, but you mentioned that a lot of these companies are still trying to patch holes from 2022. Can you expand on what you mean by that and why there would still be damage from that fallout?
Yeah, I mean, for sure. Like, we already talked about the Celsius gap, right? But we also can see like one of the assets on the Blockfills balance sheet here is about an $8.5 million claim, which is stuck in Singaporean court, right? So if I have a lender who has capital with me and I need to go deliver him his capital back because he's called it from me, but I have $8.5 million stuck in, a Singaporean bankruptcy claim, I can't get to that capital, right? So that is still sort of dragging these folks down. Same thing with Axa Digital here. That was a Bitcoin miner where Blockfills had been lending out capital sort of on behalf of Nexo, another one of the familiar characters showing up again. Axa essentially went into bankruptcy, paid all of their invoices off, and said, screw it, we're done with this. And that again is like sort of a 2022 era issue, which is still a challenge for their balance sheet today, right? Those holes don't necessarily close. It's not super easy to make $10 million and just have that liability wiped off the books.
I mean, it sounds like just an incestuous mess of lending. And I think it's kind of incredible that, a blow up from 2022, the hangover as these companies restructure and try to settle those debts can still be felt today, 4 years later. Basically.
And it's not just blow ups too. It's like the other things that were going on in the industry at the time were, you can think about like sort of the full spectrum of things that went wrong in 2022. There's uncollateralized lending, and we got a little bit of uncollateralized lending here. There's derivatives books gone awry. We got a little bit of derivatives books gone awry here. There's over allocating to Bitcoin mining. 36 million deployed in January of 2022. Also not, not the best, right? Like mining has been tough. So they've essentially touched every single one of the hot pans in the kitchen. And at this point, like, the hand is burning off and you can only keep it behind your back until someone smells something for so long.
Until someone sniffs that burning flesh, I guess, right?
Yeah.
Francis, thank you so much for joining, man. We'll have to get you back on sometime soon. We'll be keeping track of this closely, and we'll be writing a kind of second day take. Some of the stuff we talked about today for Friday's newsletter. So if y'all are interested, keep an eye out for that. Francis, nice to see you as always, sir. Have a great day.
And now a word for our sponsor, CleanSpark.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
Okay, let's talk SEC.
Yeah, for our next story, light at the end of the tunnel for all of you token lovers and degens out there, because the SEC chairman Paul Atkins is saying that actually regulatory clarity is finally coming. In a speech at the DC Blockchain Summit yesterday, Chairman Atkins was addressing the crowd saying, quote, "It is a pleasure to join you today to discuss a subject that sits at the center of American innovation, capital formation, and the enduring principles of our securities law. For over a decade, market participants have operated without clear guidance on a fundamental question: when does a crypto asset implicate the federal securities laws? Today, I am pleased to announce the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation." Now, before I get into what this means, just one housekeeping item. This is not official SEC policy yet, but they are this is how I read this. They are working on this taxonomy and a kind of token safe harbor carve out in existing regulation. Now, as for the timeline for when this will be enacted, it's anyone's guess. I would be shocked if we didn't see it maybe sometime later this year. But this, for anyone who's been paying attention to crypto regulation, this is a huge 180 from the prior guidance we got under Gary Gensler, where it was this kind of guidance by enforcement regime where the SEC would kind of putter around and they wouldn't really say what was and wasn't above board. And then companies would launch a token thinking they had done things the right way. And then boom, they'd be slapped with an investigation, with a subpoena, and then they would have to engage in some sort of litigation with the SEC. So the SEC would go and enforce its regulations by basically taking companies to task without giving them proper regulation and guidance beforehand. But now there are 3 pillars to what Atkins is saying the new framework will look like. And those 3 pillars are a startup exemption, which is a roughly 4-year registration exemption, which allows developers to raise up to $5 million over those 4 years, as long as they make certain public disclosures and notices and give some notices to the SEC. This is not exclusive. So existing options like Regulation D, which allows companies to sell their securities to accredited investors without going through the traditional rigmarole for issuing securities. There's also a fundraising exemption. So the startup exemption would be just a startup that's issuing a token. And the amount that they can issue is only $5 million, very small. The fundraising exemption is for more mature companies where over a 1-year period, they can issue up to $75 million with certain reporting obligations. And finally, and this is I think the biggest part of this, is that there is now like legal clarity on when exactly a cryptocurrency as a security has like an end date. And what I mean is they're devising a definition for when a team can reasonably say we have distanced ourselves from this project and this coin should no longer be considered a security. So what this means is like legal clarity that a crypto asset exits SEC jurisdiction once the project team's essential managerial efforts have been completed. And this is very similar to the argument for Ethereum post facto. A lot of people said Ethereum was launched, the SEC in the past has said Ethereum was launched as a security, but now it is no longer a security because it is sufficiently decentralized. This says something similar where there's going to be a token safe harbor carve out within regulation that says, okay, you're a team, you launch a token, you're managing the project, but here is a clear exit strategy for you. Once you can show that management has departed from the project and no longer has managerial control over the project, it then graduates from being a security to maybe being closer to like a commodity or a digital collectible. And that's one last thing here. There are 4 categories that they deem not securities: digital commodities, that'd be Bitcoin, digital collectibles, NFTs, digital tools. I don't really know what that means, and payment stablecoins under the Genius Act. So all that being said, with this speech, nothing is concrete yet, but Atkins is saying we are working on a framework that will give you more clarity than you have ever had before for launching tokens.
And it surprisingly actually seems to mirror, from my view, basically how our industry has tried to advocate for ourselves for years. Especially the ETH case is a great example. It launched. It was very much a controlled. It was very much a security by how you would view the Howey test. But now it is not. The various governing or authoritative groups don't have complete control of the protocol anymore. Revenues on chain do not directly fill their coffers. So yeah, love to see it. I'll also note, the SEC defined as the startup exemption being 5 million, the fundraising exemption being 75 million annually. In like broader crypto assets, there's always kind of a moving target for what like a fair value of a cryptocurrency is, and what are the major thresholds for your meme coins. It used to be like the $1 billion market cap. Your meme coin would graduate into the big boys, and there would be lower thresholds at maybe 50,000 or 100,000 market cap. Does it get out of the trenches? So it's funny because the SEC almost like defines the new thresholds. These are the new de facto market cap thresholds, at least as far as issuance of the token by the company building these assets can be.
Yeah, and one more thing to note on the carve outs for exemptions for the fundraising and for startups. Interestingly, and I'm really curious to see where the SEC lands on this. Adkins didn't touch on accredited versus non-accredited investors in that. So accredited investors are qualified investors who have the ability to buy into security sales that most people don't. I'm not totally sure what the threshold is. I think it's like you have to have like 1 million in assets or maybe $250,000 in annual income to be considered an accredited investor. There's a certain threshold that you have to meet. But Adkins did not mention anything specifically in this speech as to whether or not accredited investors only will be able to buy into these exempted token sales, basically. And I think that's really important for where this regulation lands, because if they do open it to unaccredited investors, that is a pretty liberal stance to take in terms of opening up token sales to retail investors. That's always been the argument against letting companies just issue whatever tokens they want, is that some schmuck who doesn't know anything about blockchain, let alone finance, and then they're going to buy, Harry Potter, Sonic, Shiba Inu token, and think that they're going to get rich from it, and they end up immiserating themselves because the token crashes. So I'd be curious to see where they land on that, because there's a part of me that says, yeah, you should open it up to everyone, but then there's a part of me that says, actually, a lot of people are really bad at managing their money, and they'll probably lose it.
Yeah, we have a comment in the live stream chat on YouTube. The fact that accredited investors is a thing I find baffling. You and me both, man. You and me both. Well, let's move on to, I think, the fun,
the spiciest story
the
today.
spicy part of the episode.
This is the spiritual successor to a 2017, 2018, circa 2018 New York Times article called "Everyone is Getting Hilariously Rich and You Are Not." I think the only difference, though, is that was a very bullish headline, and this one is more bearish, at least in terms of how it is presenting the industry. This is a Vanity Fair expose, feature piece, whatever you want to call it, called "Crypto's True Believers Demand to Be Taken Seriously." So you can already see this is framed as the crypto riche are much like petulant children that need to be herded, appropriately into a space where they can be controlled, but they demand to be taken seriously. They're like children. We don't want to quite give them any sort of consideration, but they're asking for it. And this article really profiles a lot of very well-known people in the space. As you can see from this header image, we've got Mike Novogratz, the CEO of Galaxy Digital. We've got Meltem Demars of Crucible Capital, formerly of CoinShares, and Kathy Wood of ARK as well. The founder of OpenSea. Not that interesting to me. I'm sorry. It's just not. And Carson Wee, who I actually don't know very much about, but we'll get into it in a second. I just want to highlight some of the bangers from this. And just to kind of drive this point home, at this point, I think most people in crypto are used to the media dragging them. This, though, is a special type of dragging because it's dressed up as being positive. This is press. We're going to take this glamorous photo shoot inside this really nice hotel, inside this luxurious bar. But we're also going to kind of give you backhanded coverage and undermine you stylistically every way we can in the actual pros and with the photography at the event.
Yeah, I'll say the piece profiles a number of like longstanding, well-known people within our industry and broader crypto, and the piece is not written so obviously to be a hit piece. However, if you're in the know, it feels like a Mean Girls play where like they lined you up thinking that you're going to get to be in a lauding piece on how cool your industry is. We brought a photographer, went to a cool venue in New York City and had you take a lot of great style photos, but then it reads all underhanded. And if you are not in our industry, it looks terrible. What's funny is I'll note that a lot of the comments that they'll make, especially like Meltem will make in this piece, many of which are bangers, I think are like very insightful. And I'm like, yeah, that's probably pretty true. But to the outside, which is the majority of the readers of this piece, the majority of the audience of Vanity Fair, it reads like the height of vanity and delusion and cult. So what are some of your favorite?
The height of vanity and delusion and cult mentality, I think, is perfect here. And here, just some of the quotes speak for themselves. The other thing I would say is the way this is framed. They stuck these entrepreneurs in a room together and just let them talk. And the journalist probably was just sitting there listening and would take things completely out of context and quote them here. I mean, like that's kind of par for the course for a lot of these things. But like, for instance, this one seems like there's probably a lot more context to it. This is from Meltem Demars. Technology without belief, technology without spirituality is nothing. What we were building was a religious movement. Also curious in terms of the tense, as though like the movement's over. It's done, guys. But to what Charlie was saying, that's perfect in terms of if you're a crypto person and you've been immersed in this for long enough, you're a Bitcoin maximalist. A lot of the stuff does feel religiously charged with the conviction that some people have. And there are some real zealots in this space. If you're a normal person reading that, if you weren't going to invest in crypto before, you're probably not going to regardless of this, but you're really not going to be interested in it now. And then this is also... oh, sorry, go ahead.
Oh, another good Meltem quote. The Crucible Capital Meltem founder judges potential investments on a sliding scale of Riz and Tiz, charisma and autism. Here she says, here's the secret to lasting a really long time. You never become the main character. Everybody knows who I am, but nobody really knows why. That is such an underhanded way to frame that comment. Again, with a picture of her looking disdainfully down at the camera. It seems like it looks like she's absolutely out to fleece you. And
they
the thing is,
really,
everybody in our industry knows that she's using sardonic language and tone. She's being sarcastic because underneath charisma and tiz, if you will, are like actual metrics such as like how well do you think you can market and how like what does your tech stack look like? That's what she actually means.
yeah, it's a good point, and it's this kind of sarcasm that reads very caustically if you don't have the context of the rest of the industry. I mean, but even though framing, you know, her investments on a scale of Riz to Tiz is very much a chronically online person thing to
Yeah.
do. Oh my gosh. Okay, this is fantastic. I'm not on Blue Sky, but Blue Sky thinks it's a puff piece. This is really interesting, and this is probably for another podcast topic entirely. But at a certain point, your information silos on the internet become so isolated that you can only see things through your cognitive bias. So my cognitive bias with this is like they are making these people look freaking ridiculous. They are dressing these people up as vain money mongers, and that there's no other takeaway from that. But it's funny to think that the people who are kind of maybe already biased towards crypto, like in the Blue Sky sphere, they see this as lauding them, you know, for whatever reason. But this photo of
so I want to
here, let's get this tweet up. This is a really interesting diagnosis from a photographer of what's going on here.
So yeah, you found this tweet. This is from Dennis and Bertram. Quote, I was a fashion photographer for over a decade before crypto. I worked for magazines like Elle, Cosmopolitan, brands like Louis Vuitton and Gucci. Quote, the Vanity article was a setup to mock crypto, and those it depicted definitely reads that way, because look at this picture of Cathie Wood. She's sitting there. She looks
looks scrunched up. Yeah, and that's one thing that he points out in that tweet is the angle for the shot is elevated. It's upward. It's meant to look down on her and make her look smaller, right? And he also go back to the tweet thread, Charlie, because he's got some other really good. He's got some other really good, like of Carson Wee here, who I had no idea who this guy was, but apparently he's pretty well known. The Bitcoin Playboy. And, you know, he doesn't really have, Dennison doesn't have any comments here, but when you look at this, go back to Carson Wee. When you look at this photo, he kind of just looks crazy. And the way that he is, the composition of this photo does kind of depict him in just an unflattering light, man. I mean, this, you know what I mean? Like, it seems
he looks like he's on year 5 of a bender.
Yeah. Yeah, exactly. And then if you scroll down,
might be, but then we have Cathie Wood here.
Yeah, there's the one about Cathie Wood, and then
look at this. Look at this. Camera looks down on her, frames her to minimize her statue. In the background is a disheveled curtain. Her legs are crossed at the ankle, and deliberate inclusion of a bellhop trolley. So very disconcerting photo. And then you have Devin and Kuo, I believe, Coinbase, OpenSea founder, deliberately set to look like pillars about to topple. The lines are all crooked. The perspective's off. That's correct. For me, the one that you and I really loved was, I say loved.
I think you have to scroll up.
Where is Novogratz?
Yeah.
This one.
Yeah. This looks like you're approaching a mob boss who's about to ask you for your entire family's wealth in payment of a debt, or he's going to break your kneecaps or worse. I mean, they really did Novogratz dirty in this one.
Yeah, he looks like the villain from Eastern Promises. But yeah, like look at that lighting. It's direct, splotched lighting on his face. A very intense look and glare. His attire is all red suit. He's a former fighter, so he's always going to look intense. But if you're reading this, I think he's like a former wrestler or fighter. Yeah, definitely. This man has been in the arena in multiple ways. So we could probably keep going, but we do want to get on to our next segment.
Yeah, Just a few more notes on this before we hop to Adam from Ledn. I just want to read a few more quotes here. Quote, "They're all pussies," end quote, says Meltem Demars, an early crypto investor who now runs her own firm, Crucible Capital, of her panicked peers. And then just going back to the flourishes in this, that shows that the author does have maybe not disdain, but wants to paint them in a certain light. She is layered in diamond crosses and wearing a black sweatsuit with her firm slogan, "Believe in something," bedazzled across the ass. For the first time in years, she is buying Bitcoin again. I do have to say, as a writer, it's a very good polemic for what it's trying to do. It's like a soft core polemic. You know, they're not really going out and taking the deep plunging jabs with the knife end of the pen, but they're probing a little bit. You know, they're looking for the weak spots. Another one. Unlike Jesus' followers who doubted his resurrection, crypto's true disciples aren't losing faith. Really, DeMar says, what we're building was a religious moment. Talked about that earlier. And then I just want to do this one too, because I think this is so good. This is one of the lead-ins to one of the latter sections. The morning of the photo shoot, Wood doesn't recognize Demoirs, whom she hasn't seen in a decade. "You somehow look younger," Wood said, pulling her into a hug. "It's because I'm rich now," Demars responded with a smirk. Carlson Wee introduces himself to Wood with the sweet docility of a young boy meeting his hero. They immediately dive into conversation, blah, 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 blah. They lightly skirt the reality that crypto is down nearly 50% from 3 months ago. Novogratz, this one is incredible, swaggers in wearing a full-length silver puffer jacket, greeting everyone warmly before announcing that he really wishes he weren't on a day 2 of a gnarly hangover. He then proceeds to describe a Saturday night that climaxed with a 4 a.m. trip to the Burning Man inspired New York nightclub Gospel, which he hopes his 30-year-old daughter and her new husband who live nearby did not witness. I mean, it's just like you're trying to make these look like the most degenerate people ever because they're in a degenerate industry. Like that's
look, we're not denying that everybody knows Novogratz likes to go out to the club, but he also is a very visionary, asset manager and is absolutely killing it in the AI data center game.
Yeah, he's the CEO of a multi-billion-dollar company.
Yeah,
I get it. You may not like how he made his money, but anyway. We'll leave this where it is for now. Go check out the article. I think for anyone in crypto, it's a good reminder that a lot of the media, a lot of the mainstream media, they're not your friends. We're your friends.
Yeah, don't talk to journalists except for us. Only talk to us. We're the only journalists you talk to. So, and let's move on to the next segment.
Yeah, on that note, we will bring up Adam Reed, CEO of Ledn, to talk about the current state of the lending market. Adam, welcome to the show.
Welcome.
Sir.
How's it going, guys? How are you? Great to be here.
Pretty good. Thank you for joining. Really appreciate it. A lot of news to chew through. We had Francis Corvino on of Lygos to talk about the Blockfills blow up. We will not bring that up with you, but we do have to ask, given Lennon's business, financial services, lending and borrowing, all that kind of stuff. How has the current market and the current dynamics we've seen since the February sell-off affected business at all on y'all's side of the world, or just in the industry in total?
Yeah, I mean, within the lending segment, I mean, the nice thing about loans is people use them, in any market condition, right? When the Bitcoin price is lower, it's an even more reason not to sell your Bitcoin to take a loan instead. When the price is higher, our clients are wealthier in fiat terms, so can borrow more and can do more with their Bitcoin assets to diversify. So we're still seeing, fairly strong originations. Admittedly not the origination level or growth level that we saw in the second half of last year when Bitcoin was really growing rapidly. But we're I think comparing with prior downturns, much more stable. So I think there hasn't really been any major catalyst, right, of this downturn. There's no FTX. There's no major obviously with the Blockfills was one bankruptcy, but relatively small as far as overall market structure, and to date quite isolated. So no major events or catalysts causing anything.
Yeah, I mean, that was kind of one of our questions to Francis, is whether or not he was surprised to see more contagion from this Blockfills blow up. Because, I mean, that was really the story of 2022, I think, right? Terra Luna went bust. A bunch of people were overexposed to that. Then you kind of had this cascading effect that eventually affected everyone from Celsius to FTX. Now, granted, that's like kind of a simplification of what happened, but there was a lot of, there was a lot of cross contamination, I think, in terms of who owed what to whom, and we ended up getting this kind of domino effect. And we asked Francis, like, are you surprised to not see more of that happening? And he said, no, not really. And I'm just kind of a second or a follow-up question on that same line to you. Do you think a lot of the industry participants have kind of learned from 2022? Like, are we seeing safer lending practices from most of the practitioners in this space? Are there more guardrails, would you say, or not at all?
Certainly, clients are more educated and smarter. I think they're asking more of the right questions as far as how are companies like Ledn handling their Bitcoin. Where is it during the process of a loan, and forcing thing like Ledn does proof of reserves, right? So one example of showing clients the transparency of how their Bitcoin is handled behind the scenes. So I think because many clients have been through that prior cycle. Some unfortunately experiences losses. They don't want to see that happen again. So that forces companies like Ledn to bring a better product to market. So I think that upgrade in the level of service and transparency and security around Bitcoin is welcome. I think there also is less of certain trades in market that were unsustainable, right? We don't have the GBTC trade happening this cycle where it was there was leverage cycling and doing things that were really reliant on certain trades going this way. I think most people are taking Bitcoin backed loans now to make real world investments, right? So you're not doing it to cycle within the Bitcoin or broader crypto specific trades that have this kind of like massive spiral effect down when everything goes the wrong direction together. So I think there's that disconnect. Also the type of lending is very different, right? When you're taking a Bitcoin backed loan, you're over collateralizing it, you're putting up Bitcoin. When you're running yield accounts, that's where there's the opportunity to loop it, right? Where you're offering a certain yield that's being lent to another entity or protocol, uncollateralized, that causes again some massive leverage in market. We look at this all the time. Like I think again, when we think about just the consumer segment of Bitcoin backed loans, it's actually really small compared to the overall size of Bitcoin, right? We estimated at 3 to 4 billion of individuals. When I say consumers, we always talk retail versus high net worth, so I just like to say consumers. So I think the consumer market for Bitcoin backed loans is 3 to 4 billion on a $1.3 trillion asset, right? So that type of lending is again just done in a very simple way over collateralized Bitcoin. So I don't see it suspect to the same issues of market structure that existed before, when a lot of individuals were running yield accounts.
So, Adam, we had a previous guest on this call Ledn's Bitcoin-backed ABS the most significant thing to happen in Bitcoin in years. I believe it was 188 million. Tell us a bit about that and who is buying these.
Of course. Well, thanks. I'm flattered to hear that comment. We've got our teams been working really hard on it for over a year. Who's buying it is investors that were previously on the sidelines of Bitcoin coming into it, right? And that's exactly why we worked hard to develop the structure. When we got it rated by S&P Global, that opened up a universe of a whole new different types of participants that aren't in this market today, because we put it in the same framework that credit card loans, auto loans, even residential mortgages are done. And now that it's rated and put in the structure that they're used to, different types of institutions can buy it. Those institutions are we had a large reinsurance company participate in the senior tranche of the debt. We also had a lot of hedge funds and traditional credit funds participate. Obviously, credit funds, that's a broad name, but that would be pension funds behind that. Maybe life insurance companies as well investing in these types of credit vehicles. We had over 50 different roadshow meetings to market the asset-backed securitization. So there were back-to-back meetings, both in person and virtual. And then we had 15 different institutions actually participate and buy it. So Jefferies was the lead underwriter of the deal, and they actually told us that they've never seen as much interest as they saw in this ABS Bitcoin structures there in their entire career. So we were thrilled with that, and hopefully it's something that a lot of other participants can grow and perhaps replicate as well. So it's good for the overall industry.
You're muted, Colin.
Yeah, sorry. So for kind of double tapping on this, the institutions that are interested in this, what exactly is interesting to them about it? Like, well, how does this differentiate from other kind of crypto Bitcoin securities or equities that they could invest in? Why this product specifically?
Yeah, I think the fact again that we kind of put it in the same box that they're already doing other types of financing. So, I always joke that the best way to get something approved is like only change one variable at a time, right? So like if you want to get someone that's not doing something now to do something new, don't introduce them to 5 new things. So what do? We put Bitcoin in Fidelity as the custodian, so they're familiar with Fidelity as a name. That was helpful because when obviously they hear that brand and reputation, like, okay, understand, don't need to think too much about that. That's a risk we understand. They have other products rated by S&P Global. So again, a rating agency that they can rely on, understand, check. And then even the trust servicer, the backup servicer, all of these things were other pieces of the puzzle that they were already familiar with. It was just Bitcoin as the asset that was new. And again, they had the backup of S&P Global explaining it, understanding it, analyzing it that they could rely on. So I think it was really that piece that, again, fitting in a very similar structure that they're already used to, that allowed us to come in. And we actually did this more for the fact that we needed to open up this type of instrument to more investors than to get a better rate, right? Obviously, we're doing our best to drive down the rates of Bitcoin-backed loans. We want to see the rates as low as possible to increase adoption, bring more clients into this type of product. But we were concerned that there just isn't enough dollar capital coming into the Bitcoin lending space, right? Like I shared before, there's 3 to 4 billion. Obviously, Tether's, an investor in Ledn. They're a big participant in the lending space. There's other crypto-friendly banks like Signum, others in market, but there just isn't, hundreds of billions of dollars of dollar capital that says I wanted to do Bitcoin-backed loans today. So we had to figure out a way to get that type of investor into the market, because we see this as exactly that size. We see this developing like residential mortgages, where there's literally like hundreds of billions of dollars happening every year and broadening out, not just in the US, but also, of course, globally as well.
So is a helpful way to look at this more, like you said, sourcing more liquidity and potentially making it easier to actually match lenders and borrowers in this case. Because I was looking at Ledn's website, and one of the things I think is interesting with the platform is you can both lend through Ledn or you can borrow, and the lending interest rates are pretty healthy. And I assume part of that is because the borrowing rates are pretty high, and that's where that income's coming from. So is one way to read this just it opens up a new avenue of liquidity that makes it a lot easier to actually manage who is borrowing and who's lending on the platform?
Yeah, we view our job as simplifying and providing comfort and, I guess, what's the right word? Peace of mind when people take a Bitcoin back loan, right? So um, the best thing about Ledn's product is the rate is fixed, and you have that available for a year. You can auto renew the loan every year if you'd like to take it longer. But when you take a Ledn loan, you know exactly what you're getting. You know your liquidation thresholds. You know the interest rate you're paying for that year. And our job behind the scenes is to make sure that capital is available and to make sure that we can drive the best rate possible. So this goes into that latter piece. Is the great thing about an ABS structure is that it was actually a 3-year financing. So it gave us certainty, and therefore gives us client certainty that we can provide a fixed rate for a certain amount of time. Right? Clients are using Ledn loans to make real estate investments. They're using it to pay down other higher cost debt. They want to know what they're paying throughout the life of the loan, right? We do compete against other types of financing in DeFi, but 99% of loans through decentralized finance are variable. So you might be paying 4.5% today, but if Bitcoin rips and there's more demand in that pool, you might be paying 35% tomorrow. So that's the piece, is like everything we do is to give clients that peace of mind, right? The proof of reserves to tell us, clients what you're doing with their Bitcoin, and the fact that it's a fixed rate product. So all of this plays into that in making sure we can deliver on that mission.
I think it's incredible to see how much innovation is still happening within this space. And it reminds me that honestly, Bitcoin credit industry is so young and still so early, right?
Absolutely.
I mean, you look back to like 2017 and even 2021 and some of the fly by night lending practices that ended up going horribly, obviously, for a lot of companies, that those are starting to be pushed to the wayside. And now we actually have like, S&P rated bonds out there for this landscape. It's pretty exciting to see. But Adam,
yeah, it's amazing. I mean, I joked actually when we created it, we started Ledn in Canada, and going back 8 years ago, we could barely get a bank account open for our company, right? And now we've got, S&P Global. They actually just did a webinar this morning on the product, so it was pretty great to see them talking about how it's developing. And as I said, I hope it gets replicated. I hope the whole industry can benefit it. So we're all in this mission together.
Well, congrats on pioneering it, and we will be keeping an eye on
Adam.
development.
Thank you, guys.
Sure. Adam, thank you so much for joining. Have a great week, man.
Thanks for having me on. You too. Thanks, guys. See ya.
All right. And then we have Tom Massaro coming up next. But before that, quick note from our sponsor, Lygos. Hedge funds are getting liquidated, and other funds as well, other companies, as we covered earlier. Is your Bitcoin safe? It's not just Bitcoin's price drying up. Big whales, hedge funds, and lending desks are going under after the notorious 1010 and 25 liquidations. Counterparty risk is rampant, so it's more important than ever to understand who actually controls your Bitcoin. Don't be the next FTX or Celsius victim. If you are working with another loan provider, do yourself a favor before it's too late and check out Lygos Finance, our preferred non-custodial Bitcoin lender. That's right. You heard that right. Non-custodial, using Bitcoin native smart contracts to protect your stack. With Lygos, you always know where your Bitcoin is. Hold your keys, no wrapping, no bridging, no rehypothecation. Get competitive rates as low as 10% APR. Go to lygos.finance to learn more.
Yeah, no wrapping, no bridging, no rehypothecation. That's true. Also,
no tomfoolery.
No tomfoolery, but we're going to have Tom Massaro here. Lygos sent me this cool iPhone to demo their products. So I'm a fan and enthusiastic user of their products. But enough about that. Let's get our boy Tom Massaro up on stage. Tom, welcome to the Blockspace Live Show.
Hey, gents. How's it going?
Pretty good, man. Welcome back. A short segment this time. We had a longer show with you in Nashville, one of our better shows to start the year. And now we've got some big news from y'all. So Tom is head of strategy at Cathedra, director of strategy at Cathedra Bitcoin. And y'all just announced a merger with Sphere 3D. I believe this was a week or two ago, and this news came out. Tom, give us a quick rundown of how all of this developed.
Yeah, I mean, just like anything in this industry, it's based on relationships, and usually long-lasting ones or business ones. And so, we were fortunate to develop a relationship with Sphere earlier this past fall, where they became a hosting customer for us, and basically developed that relationship through that period, and became apparent that there were a lot of, I don't want to overuse this word, but synergies between sort of our infrastructure heavy business and their business, as being having a lot of machines, having the capital markets kind of exposure on their end, and obviously having the listing, where it made a lot of sense for us to think about combining forces.
Sorry, we had to go for a call-in.
Yeah, here, I want to get this up, Charlie. Let's just leave it like this. You mentioned synergies, Tom. What kind of synergies exactly? Like, what is Cathedra bringing to the table for Sphere and vice versa?
Sure thing. Yeah, we're bringing essentially a vertically integrated power infrastructure. So we build, develop sites mostly here in TVA. We very much focus on cheap, reliable power at scale. And we build these sites, we develop them, we host for some of, I would say some of the top tier, institutional customers that are in the United States. We've had them for a really long period of time. We've hosted for ASIC manufacturers going back years. And so they bring a lot of new machines as well as capital markets. And we're excited to take that to the next step. I think they, most recently had somewhere near 2,500 new generation S21, variants that they've deployed, most of them with us. And, we believe that, with those machines, as well as, the ability to continue to grow out our infrastructure, it makes for a great match.
Yeah, and I'll point out that you guys say that you are pursuing, quote, 100 megawatts of expansion opportunities. That's huge, most of which I understand probably AI HPC. Far cry from where we all were 5 years ago. Can you kind of rehash this major industry trend and your role in it?
Yeah, I mean, really, it's I think I'm trying to remember who made the statement. Somehow we got categorized as energy pirates back in the day, and to a certain extent we still are. And I think the big difference between 5, 6, 7 years ago and today is now there's two potential buyers for that stranded energy, and it's HPC AI, and then it's Bitcoin. And primarily where I've have focused most of my time since leaving Great American Mining was on these smaller, I would say, dispersed off-grid opportunities. On-grid opportunities that are like sub 20 megawatts. And, for the most part, we could just sort of do our thing there with Bitcoin mining. But just up until maybe the last 6 months, the HPC AI opportunities are starting to come down market. NVIDIA has, launched some initiatives where they're focused on developing a distributed, cloud, I would say, like infrastructure for GPUs. And they want to, make sure that they represented within sub 50 megawatt tranches. And so that opens up a lot of opportunities for folks like our size to be able to accommodate that.
Tom, on that note, as we see all of these miners moving towards AI and HPC, we've come back to this question a lot, and I actually asked you in our full show, but we'll rehash it again here. What does that mean for Bitcoin mining writ large? I mean, like, what's your reading on the current state of Bitcoin mining specifically, with hash price like hovering near all-time lows, hash rate kind of stagnating, and what do you think is the future of this industry in the United States specifically?
Well, I know I have more gray hair than I've had in the past, and it's just a bear market. You just got to deal with it. I think, like what you and I talked about, Colin, the last time was this weird kind of, I guess like two things happening at the same time, which is lots of really decent machines are hitting the market, flooding the market. But yet at the same time, this depressed price and depressed profitability that's out there. And so it's made it sort of unique, because in prior cycles, when price and profitability are at the areas that they typically are, mining sort of like dries out. And then, the ASIC manufacturers will sort of start developing relationships with hosting providers like ourselves and self-host machines until the market kind of picks up. That's really not taking place this time around. And so I think, like, overall, there's a little bit of an identity crisis for a lot of, I won't call them miners, but people who are into Bitcoin mining, along with, doing AI and HPC. And I really just think they're two different customers, and they are still very valuable for a specific type of load. For example, we just built a 15 megawatt site in TVA. It's an off-peak only site. So for 83% uptime, we get very, very favorable rates. And because there's this influx of very cheap machines out there, it makes mining profitable. It allows us to continue to build that business. There are all these like different shoulder times that are very, they're built for Bitcoin mining. And so I think, whereas HPC AI, it's much more, you need more stable uptime. You have to have a lot of more redundancy. There's more permitting that's required. And so that's great. That's better for bigger chunks that maybe will need that type of investment. But for a lot of these like shoulder opportunities to take place, Bitcoin mining, I think, is still going to be, still a viable thing. I just think we're moving from the scale of, or the age of mega miners into a more distributed side of things. And, like what do things look like 2 years from now when you've got, you and I talked about a little bit about this, Colin, was you're going to have a lot of these mega miners who are now mega HPC AI providers, but at their core, they were Bitcoiners, in 2 or 3 years or 5 years. And they're still going to look at things the same way they did when they first got in. And so I honestly think there'll be a renaissance when it comes to a lot of Bitcoin mining in a couple of years. This is very cyclical right now.
Yeah. Each Bitcoin mining meta looks totally different from the previous one. So the one thing we can be certain of is that it'll look very different in 4 years than it does today. I hope you're
I hope you're right about that, Tom, because I would love to cover more Bitcoin mining in the future. But we will leave it there. Thomas Arrow, thank you so much for joining. Hope you have a good day, man. Always good to talk to you.
Appreciate it, gents. Thanks so much.
See you, man.
Adios. Okay.
All right.
Last segment. Bit of a cry corner this time.
A pretty big cry corner, and it's one that actually relates to some reporting that we've done. We'll keep this brief because we're running up pretty long here. But Bitrefill has suffered from the Telegram hack that is being perpetrated by the Lazarus Group in North Korea. So we did a podcast on this about a month or two ago with Taylor Monahan of MetaMask. The TLDR is Lazarus Group hackers, a hacking syndicate in North Korea that is tied to a lot of crypto hacks, is going around and tricking people to download malware by impersonating people on their contact list through Telegram. They're doing this so well that when you pop onto one of these Zoom chats with someone who's being impersonated, it will actually have a video of the person that you think that you're talking to. So you can have a buddy that sends you a Telegram chat from a chat that you've had with this person for years, as long as your chat history goes back, because it's their actual Telegram account. It's not a fake account. They will get you on Zoom, and they will actually have a recording of that person. They will trick you into downloading malware to your computer. Bitrefill fell victim to this. It's the first big crypto company that's at least reported falling.
That we know. The first one that's reported. So it was disclosed of it was a March 1st incident. They disclosed it yesterday, confirmed that it looks like the Lazarus or Blue Noroff group, and it originated, quote, through a comprised employee laptop from which a legacy credential was exfiltrated.
So basically, an employee got hacked, and then Lazarus Group was able to then go through Bitrefill databases and company websites, etc., wallets as a result. They have not disclosed how much money has been stolen. They did disclose that about 18,500 purchase records were accessed. Those records contain limited customer information such as email addresses, crypto payment addresses, and metadata, including IP addresses.
Yeah, so hopefully I can still use Bitrefill, one of my favorite companies in the space. I've used them for forever. If you're not aware, Bitrefill sponsors the show. Please hit us up. Bitrefill is awesome. You just send Bitcoin and you get gift cards. So
it's a great service. You can buy gift cards, preloaded Visa cards. You can get SIM cards from them, temp SIM cards and things like that.
Yeah, and you can also get free Bitcoin if you're from North Korea.
Yeah, great service.
I'm sorry.
So that was good. It's a great service. I hate to see this happen. One last note just on the complexity of this hack. Jimmy Song also allegedly was hacked. I think he tweeted something about it recently. This is seasoned Bitcoin developer and evangelist Jimmy Song, and that just goes to show this is the most sophisticated phishing and hacking attempt that I've ever seen in crypto. And they are actually taking control of people's real Telegram accounts through this. So if you see a message asking for a Zoom link from someone that you know and have contacted a lot, double check with that person through another communication method to make sure that it's actually them and not a North Korean hacker. And with that, we will close. Thank you all for tuning in.
And with that, I'm going to go hop on a Zoom call. Thank you all. See you all on Wednesday.